Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. We had some major updates come out this week from China as its real estate numbers from October came out, showing major slowdowns in the real estate market. This at a time when the Chinese real estate developers, the big ones, are going from bad to worse. So what I want to do today is start off and check in with Evergrande.
Do I look really sick to you?
Which continued to fall even further this week after the founder dumped his shares, or a large portion of them. Then I want to move on to Kaisa, which, if you'll remember from last week, had a bond swap proposal, or extension request, that it was waiting to hear about, due by this Thursday. So I do want to review the Kaisa developments. And then I want to get into Chinese real estate data, as it's definitely starting to show a major slowdown as this real estate crisis continues to worsen. We do have a lot of pivotal updates this month coming out on China, as Evergrande's grace period from the payments it missed last month are coming due this month, next week actually, and other real estate developers that have over $12 billion in trust funds due throughout December. So if you want to get those updates, make sure you click like and subscribe. But for now, let's get into the Evergrande updates. Evergrande's founder, Hui Ka Yan, sold 1.2 billion shares on the market this week, and this was the first time ever that he had sold any of his shares. This dropped his total stake in the company down to around 68%, down from a high of about 77% prior. This was the first time that Hui Ka Yan had decreased his position. Hui Ka Yan was at one point worth about $45 billion, and that amount has shrunk down to around $11 billion after Evergrande's fall and the subsequent need and direction from Beijing to put up his own funds to help to try to make sure that the developer pays its debts, to make sure that Evergrande at least sort of limps through while they try to restructure it. As a result of Hui Ka Yan selling so much of his shares, Evergrande's stock price plunged another 5% early on in the week, as developers saw that as a sign of, as investors saw that as a sign of major weakness on the part of the founder and of Evergrande.
Yeah, no Sherlock.
We talked about last week that when your friends start to walk away from you, that's not a good sign, as one of Evergrande's longtime supporters sold their shares. But when the founder starts having to sell his own shares in order to shore up the company, in order to shore up his personal finances, that's really definitely not a good sign. Evergrande also has, as mentioned, another $83 million payment due next week. All signs are pointing that they are going to make the payment, as they've been selling a lot of their properties, and the founder has stepped up, as we said, and dumped his shares, a large portion of them. So it's highly expected that they are going to make that payment, but as of right now, they still have not made that $83 million payment on that 30-day grace period. So that is definitely something to look out for next week. Speaking of making their payments, Kaisa, a real estate developer that we spoke about last week, had made a proposal to its bondholders, basically asking for an extension. They offered to swap their bonds that currently are coming due next week for new bonds that wouldn't come due until 18 months from now, or about June of 2023. They didn't offer any sweetening of the terms. The bonds were still going to be at the 6.5% interest rate that they're paying now. So all eyes were on Kaisa this week as to whether or not those bondholders were going to accept that deal.
But there's a lot at stake here, and a Kaisa default or any kind of Kaisa restructuring would be really quite a shake-up. But, like Evergrande, this is a sort of giant of the dollar bond market.
So all eyes were on Kaisa this week to see if bondholders would accept that deal, and very few people believed that they were going to accept it.
The deal itself looks rather tough to get across the line.
As of the taping, I'm showing my age. As of the recording of this video, the bondholders had yet to accept the agreement. In fact, they countered and offered a $2 billion injection into the company in exchange for, we are assuming, more stock, more equity in the company. And as reported on Thursday morning, also they wanted a stake in a Hong Kong newspaper owned by Kaisa. So it doesn't look like the bondholders are going to take the deal. We will find out definitely by this point in time next week if they did take the deal and if Kaisa has defaulted on that debt. Well, we'll definitely find that out by next week. And most analysts are saying that it's very unlikely that the bondholders are going to take the deal, and that it's also very unlikely that Kaisa is going to accept this counteroffer by the bondholders. So stand off. And then in other notes on Kaisa, we did find out that they have abandoned some of their properties that they purchased in Hong Kong that they had meant to develop in 2020. So they're walking away from some of their properties, and it doesn't look like their debt restructuring ideas are going to take place. It doesn't look like it's going to happen as of right now. So we'll definitely have some more updates on that though. Onto the Chinese real estate market. China's November numbers came out very quickly this week, showing that their real estate sales had fallen 38% in November, which was up from the 32% that it had fallen in October. So sales are slowing down even more and more every month, which is definitely not a great sign. Not only are the amount of sales sinking, but so are prices. Prices slowed down to actually decreasing for the first time since 2015. Chinese real estate prices decreased by 0.04%. Now, most viewers in the West are probably thinking I would give my left arm if our real estate prices could slow down to only 0.04%.
Well, give it time. See if I can't make that happen for you. All right, that's enough.
But it's a much different story in China, as they are used to continued growth rates for the last 30 years. We did have a slowdown in 2015, but when you see the economy start to slow down this much, and a little bit more we're going to get to in a second, when you see real estate prices, the amount of sales slow down by 38%, and you see real estate prices really start to crawl to a halt, that's a big deal in China that really depends on this continued growth. Especially when you're having a debt issue. When these real estate developers are having a major debt issue, problems making their payments, it's a real problem when prices slow down. They rely on continued growth in order to pay back those debts, in order to continue functioning. So we've talked about this for months now, that this is the problem with these types of crises, that when real estate developers start to slow down and the market gets worried, it's harder and harder to sell properties, which makes the debt crisis even worse, which makes it even more difficult to sell properties, and it just snowballs right along. There were also a few studies this week that came out on the Chinese real estate crisis, with UBS predicting that we're going to see a 20% decline next year in China's real estate, and Moody's, for its part, also predicted a 5 to 10% decline. So right now we're talking about a 0.04% decline in prices, and these studies are saying that this isn't going to get any better anytime soon. And Moody's even said that we are going to be predicting to have a number of more defaults throughout 2022. So it doesn't look like this is getting any better anytime soon. In fact, it's worsening, and we're starting to see the effects of this contagion in the real estate market in China. So all in all, it was another not great week for China, with Evergrande losing more and more of its value. Kaisa's debt restructuring doesn't look like it's going to happen anytime soon, and we're getting the results of China's real estate market, which is showing it's getting worse. But as always, what's in it? Why does this matter for us? Why does this matter for the West?
What do you got for old Joe, eh? What do you got for me?
It matters for us because anything that happens in China is going to affect us. China is the second biggest economy in the world, right behind the U.S. And up until at least recently, it looked like they were going to overtake the U.S. shortly. With Chinese citizens storing 70% of their wealth in real estate, and some of them starting to think that they need to rethink where they store their wealth, that could have direct implications on us in the West. Either A, they try to move their money out of China and into the West, into safe assets in the West, in Canada and the United States, and that's real estate. Real estate is often considered one of the safest assets, all debates aside as to the current state of our market. But they could try to move those 70% of those assets over to the West, which would have a big impact on us. Or if things get bad enough in China, they could sell their current properties that they have in the West to try to shore up their funds in China. Both of those things would have a direct impact on our markets, on our economies. If you look at a lot of the articles out right now on the global economy, on our inflation, on our interest rates, and everything that's happening here in the West, they are all starting to mention what's going on in China. This wasn't the case a few months ago. So if you look a few column inches down, again, I'm showing my age. If you look a few inches down on the articles online, you're going to start to see Evergrande mentioned and slowdown in China and issues with their power. So this wasn't the case a few months ago. So I think people are starting to get the idea, these analysts and these newspapers are starting to get the idea that This is definitely going to contribute to the global economic slowdown, and we do have to keep an eye out to what is happening in China. These events are not one-to-one. It's not as though something happens in China and the next day there's a fall here or there's a pop here, or it just doesn't work like that. So I think it's a good idea to continue to track these updates just because they are going to affect us. And for years, Canada at least has always tracked, everybody in the globe has always tracked the developments in the US because they always had global implications. And I think more and more now that is going to be the case with China as well. So we need to track China just as much as we tracked the US in the previous century, at least, at minimum. So I think it's a good idea to continue to track these updates as they will have an effect on our economies. If you want to continue to track those updates, please click like and subscribe, and we'll make sure you get notified. And thanks so much for watching.